hey, I'd like to sell my business. What do you think it's worth? What do we got to do? And there's steps that you can take right now, and we're going to cover those here in a little bit, that you can take right now to be able to kind of get an idea of what your business is worth. And, with that, as we're looking through that, we're going to go over some ideas you can do right now to also try to increase your value, but also kind of signal when you need to call someone like me in as a coach to help you with these things. I'm an exit planner and a business coach who specializes in helping businesses grow and become valuable companies that people want to buy. So, big piece here to keep in mind is that 80 to 90%, I think the number is 84% was the last numbers I saw. 84% of businesses do not sell. They just don't. They liquidate. You end up just selling all of your, either the building, the equipment, and whatever inventory you have, and that's it. You go on your way. I help businesses get out of that 84% trap so that they can sell their business. Big piece here is that the other side is that those folks that they have value, they think that their business is valuable, aren't looking at it from someone who wants to purchase it. You got to look at it from the right side here too. So one of the reasons that people have a hard time figuring out like the value of their company is it's challenging to figure out first which way do you want to value your company, right? There's many different ways. So there's discounted cash flow, right? I'm going to talk some accountant stuff here that even I struggle with at times because that's what we bring in someone specifically to do these numbers. There's again discounted cash flow. We got asset based, or again market comparisons to where you're looking at other businesses and what they sold for. But many times that's really just there to give you a starting point. There's emotional attachment. You feel you value your business. That doesn't mean anyone else does, right? And the value that you have it in the way of it. Sweat equity does not mean that's the same way. Had a great point from one of the clients that I'm working with, who's currently just about ready to close on a sale. Said for the person that's buying a business, they only really about 60 to 70% care about that business. They're looking to get a return on the investment. Whereas the person who started the company loves it 100% because they created it out of nothing. Okay. So there's that value gap that we're talking about that typically exists somewhere in a price point that just needs to disappear. It doesn't exist. One of the big things I deal with consistently is lack of clear data. When I ask for a profit and loss, balance sheet, cash flow statement, I should be able to get those within short order. I'm talking at a minimum, you should be able to just click print and get me something, that's just coming out there. But let's say within a week, I should be able to get solid data from any company that's looking to sell. And if you're not able to produce it in that time, and that's the maximum, that right there, you've got unclear data, right? That is going to reduce your overall value of your company. Market misinformation. Man, there's folks that are out there saying, I can get you 7 to 10x times your revenue for your business, when that just isn't reality for most businesses. You are typically, if you do sell, if you're in that, 16, what's that number? Yeah. 16% that do sell, you're going to be within 1 to 1.5 without working with a coach. You're going to land between 1 and 1.5. Working with a coach, someone who specializes in this, my goal is to get you up closer to that, to get you to 3 at a minimum, but to get you closer to 5 to 6. And that's industry leading if we can get you there. Okay. There's some one-offs where you can get up that 10x, but yeah, those are really in the top percentile. They're the best in what they do. The other thing that people forget about when they're valuing their businesses is that if the business is relying on one person, i.e. an owner operator, the value of that company is going to drop by 30 to 40% just because it's difficult to replace the relationships and industry knowledge that that person has that you were buying from. So if you're buying into a company, it's owner operator, you would expect to see a 20 to 30% 20 to 30% hit to the valuation for that business, right? Just because, again, if they're the main salesperson and you're buying it from them, you just lost your sales function. You've got to replace that, okay? It's really important. Now, it is challenging to look into there and see, and those are some of the things that we're dealing with. But there's simple ways to do self-evaluation, and this is where you can do this yourself as a business owner. It's pretty straightforward. So one of the things that we want you to work on here is going to be, it gets called seller's discretionary earnings. SDE, right, as it's known as, is your business's true profit, including your salary and non-essential expenses travel, charitable donations. It's a key metric for small business. So you want to start with your pre-tax, pre-interest earnings, and then you're going to add back your salary, benefits, and one-time expenses. Multiply by, usually between 1 or 1.5, and that's going to get you there. So an example with a coffee shop with $100,000 SD, the valuation is going to be between 100,000 and 150,000 just for the top line, right? That's kind of where they look at it there. And what that does is it gives you hey, this is what I can expect to bring in revenue wise, because equipment on certain and assets in certain businesses, they're non-consequential. They're an afterthought because you're going to replace a lot of them when you buy the place. So you're really looking about cash flow. So that's one business that you have, especially in the retail space. If you're looking to sell your business, you want to make sure you're focusing on, okay, what are we actually kicking out to the bottom line? And how do we want to go from there? Okay. The next one's going to be asset-based valuation. So that comes to your basically, if you're an asset heavy type industry or business, with, let's say trucking, like say there's a natural gas, or you're in a fuel type business, you want to sell that. You're going to be looking at equipment inventory, and then you're going to subtract. And let's say manufacturing is another one too, right? Where it takes a lot of equipment to do the work. That's going to be a great way to look at that as well too, because you're going to, especially like say in the fuels business, depending on where you're at, there's only so many people that can transport and have the license to transport. So you're really looking at the license plus the assets. So really what I do is how much do you have in assets, subtract the liabilities, add in what you have for clients on contract, and that's going to give you your base there. And again, same thing, look at a multiple for that industry. All right. And the last one's just gonna be comparable sales, where you can kind of take a look at, okay, I've got sales here of this number. What does it look like industry wide? And then you can go to like biz buy sell and just kind of see what comps are. Again, not the best place, but it gives you, this is just simply to give you an idea of what your company's worth. The big thing I want you to take away from here though is that potential growth has no value in a company. It just doesn't. I've seen it a bunch of times. Hey, I know I could increase my value if I did X. No one cares. No one cares. So don't be even worrying about that. But with that, how do you know when you need a coach? Like, this is where I get this a lot. How do you know when you need a coach as a business owner, someone to come in as an exit planner, someone who is going to be able to help you build the value in your company? It's real simple. Your financial records are garbage. Like I said, if you cannot present a P&L balance sheet, cash flow statement to me, even within a week, you're wrong. You got to get that figured out. If you are owner operator in your business and it relies heavily on you to be able to do the business, you need to get that. That's where I come in. My job is to help separate you from the business in a manner that's going to allow the business to operate without you. Therefore, you can sell it and maximize that gain. If we can do that, and this is where I want to be clear on this. When we work together and I'm able to remove you from the business, what you're doing is paying that extra work. Let's say that 30% that we're going to return in the value of that business, that's then going to come back to you to pay your taxes on the sale. So we're working hard basically to cover your taxes so you could get the actual full amount of your business back. Like, that's kind of the idea. That's where I work with folks. And your valuations you're looking at your valuations, you keep getting valuations that are all over the map. You want to bring someone in that's going to be able to help you focus on the stuff that's going to build your value. Big one here, if you are emotionally attached, if this is your baby and you are just struggling with how to separate yourself from it because it is your entire who you are as a person, you definitely need a coach in there. I come in and I help people realize that their business is an asset that they've been building for years, and it's time to set them free. We've got to do some work to get them there, but that's really important. And the last thing, if you're planning to sell within the next year, you need to have a professional come in there and do a once over on your business to just look at these things, folks, because if you don't make an effort to do that, you have no idea what you're going to get. And now you are really basically just stuck with whatever someone is going to pay for your business, instead of saying, hey, this is what my business is truly valued at. This is where the value is. And then we can go out to a broker and we can actually market your business. Okay. So this is what we do. This is what I do. But the biggest issue that I run into with customers and clients is the fact that you guys, it's so frustrating for you. It's not for me. I have nothing but empathy. You don't think about selling your business until it's too late normally. And by then, we have a lot of work to do to get you ready to go. And it's a lot of pain, a lot of effort, but it's worth the effort. Like I said, we do this correctly. My job is to make sure that we're going to build enough value to cover the taxes for the sale of your business off of the effort that you're going to put into it. Okay. So if you'd like to learn more about, again, how I help businesses, grow faster than I ever thought possible, help companies build valuable businesses. Or if you'd like to get a coffee to talk and just, hey, I'm thinking of selling my business, feel free to reach out, summitbusinessguides.com. Take care, and I will see you next time.